Alright folks, LA here. It is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains, the stormy Rocky Mountains today. Having some power difficulties. If we do lose you, that is the issue. We will get a recording tonight, so if I do lose you, just simply try to tune back in later and we'll post the recording. As far as what happened today, well, the industrial stayed positive. We had bank earnings this morning, but everything else sold off. But then again, like usual, they came roaring back again. Industrials tacked on 5 points, basically flat. The Russell got hit. A lot of the pain in this market today was Yellen. She was on the Capitol Hill doing her Humphrey Hawkins testimony, and she basically said, you know, there's some areas of the market, or actually she didn't say it, but in the notes there was a reference to some areas of the market valuations not making sense. They called out specifically biotech, social media, and small caps. Well, here we are. Small caps down 1%. If you pop over and you look at the major sectors, you're going to see those guys got hit. I'm going to go to the subsector so that we can see the ones that got hammered. And we're going to see the XBI there down, 3.5%, almost 4%. And probably social media in here somewhere. I guess I don't have SOXX in here. Let's put it in. SOXX, I believe. There we go. Social media down just 1%. So the hit today, really off of Yellen's comments, that was what started it all. That's where the pressure was. Initially, we had market pushing higher on the back of the earnings from the banks. The banks today, in particular, we had Goldman Sachs. Goldman Sachs really didn't get a huge move out of it. They got a decent move. The big move was in JP Morgan. And JP Morgan, Goldman Sachs, or JP Morgan in particular, pushing the Dow Jones up. And as you can see, trying to break 3 swing point highs. Looks like he got 2 of them at least. 58.22, actually got them all 3. So that's multiple swing points breaking through. After the bell, we get Intel reporting. Intel has already had a huge lift as a result of them telling us ahead of time that earnings were going to be a lot better than expected. They laid out the numbers. Well, those earnings came in pretty much as said, and they were up another 5% after the bell tonight. So that's going to bleed over into tomorrow. IBM also reported they were up, but IBM to me is a lost cause. And the other one was, I think those were the main 2 tonight. Let me check my screens here. I think there was actually one more I wanted to look at. Oh, Yahoo was the other one I was watching. Yahoo actually ended up down 2.5%. Yahoo's in no man's land. So that was the indexes. I mean, that was the big news of the day, really the Humphrey Hawkins testimony. And what happened with the markets? Well, if we look at the indexes, we've had 3 pushes down over the last 8 days. All 3 came on increased volume. Not huge, but increased volume. All 3 came back into, not all 3, because the day just missed it, but the majority of them have come back. 2 of the 3 have come back into these 2 big bars here. And those 2 big bars have held up like champs. This one here and this one there, right? And each time it's come into that area, as you can see, volume, 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 not as big. This is the S&P 500. It holds, sits there, doesn't want to give it up. S&Ps still look as if they could trade higher. Now, if we look at the Dow, Dow had an interesting day. It looks like I'll have to get that data. That data's not in yet. So I'll pop back over there in a minute and see if we can grab it. Let's look at some of the others while we're here. And if we look at those, composite, the composite comes down, volume expands a little bit, it's nothing serious. It's coming back into the big bar. It trades into it, bounces around, goes back the other way. This one's going to try to trade back over that July 8th breakdown bar. So far hasn't been able to do it, but it looks like it will. Give it another try. If we look at the NDX, now the NDX, of course, NASDAQ 100, it's been the strongest group of late, and matter of fact for quite a while, primarily because of all the big cap tech in there and the SOXX. This one trades down. First day it trades down, trades into that July 8th bar. That was the bar it broke back over 2 days prior. Gets into it, has less volume, flips around. This thing's going to try to go higher, and of course Intel's going to help that tomorrow. And then we go to the Russell. And the Russell continues to struggle. The Russell comes down, volume expands as it goes underneath the low, but just slightly. Just not very much, but slightly. And then it's coming back into the support zone again. Volume over there, 311, 332. So again, 3.3. It's going to try to break this down farther. It's going to try again. So the NASDAQ still struggling. Russell definitely struggling. And then we look over at the NDX and the S&P 500s. Those is still looking pretty good. And let me see if I can get the Dow here for us while we're running. Bear with me a second. We'll see if we can get that quote. And we'll see if it comes up. Now let's take a look, because I haven't had a chance myself to look through these, but let's take a look at the it looks like the Dow numbers are not going to come across, so we're not going to get it. I can look at it a different way though. Hang on, let's go a different route. Industrials, we can see it here. Alright, so spike up in volume, trades over the highs, back under, higher volume. That's going to try to trade higher again tomorrow. So of the 5 indexes, look at the Russell again. If the 5 indexes, 4 are going to try to trade higher. And the Russell is going to want to try to trade lower. Let's go to the sectors and see what the sectors did today. So we know that we had strength in the XLF, right, because of the earnings. Well, let's see if we had it elsewhere. We did have it in the transports. Transports traded higher. Let me take a quick look. CSX came out after the bell. Let me see what they did. And CSX traded slightly lower, it looks like. Let me see what the quotes were today. Yeah, so it trades just slightly lower after the bell. So CSX is actually still hanging there, can go higher. So IYT transport's still looking okay. The SOXX. SOXX trades down a little bit today, no big volume. That still can try to trade higher again tomorrow. So that one also in conjunction with what we see in the Intel report, that's going to try to trade higher. XLB comes down, still a range trade up there. Yeah, that one can actually go higher tomorrow because it's tested here on this low. So you had this low, this slightly lower, 49.29, traded to 49, almost there. So maybe a little bit farther, but this one's going to try to flip around. XLE, try to trade higher. XLE trades lower again. This one's still in trouble. And even though it got a long tail today, it didn't test that low. It did test into this low again. 98.64, and it does 9.9. Yeah, this one can actually bounce out as well. So that one also can bounce tomorrow. XLF we know is stronger. That one's going to try to break out the highs tomorrow. And that's a big sector if that one actually gets going. You got Bank of America in the morning, which will be the news there. XLI, that one's struggling. I don't think it's going farther. XLK trades down with volume, actually trades over with volume as well. This one's going to try to test the top again tomorrow. XLP. Okay, so the durables are coming off. XLU. And that one's actually struggling, so that one can come back some more. And so when I look at most of these, XLV comes back in, that one can come back in some more. And XLY also can come in. Actually, that one's going to flip around and try to go higher. So only three sectors want to trade in. So that to me looks like we're going to see this market from the major sectors and from the perspective of the indexes attempt to bounce again. Over and over and over. My goodness, how many times can we go? Ring around the rosy, right? Let's look at the overseas markets together here. So we'll start in Asia. We'll start with the 8 shares. So they traded up into those highs. So volume, that's kind of a failure. That looks like that's going to try to come in some. The HSI, which is the Hong Kong Hang Seng, that actually got over the key areas. That one can trade up into the highs again. The BVSP, the Bovespa, oh, higher again, still going. So that one had a nice breakout yesterday and continues today. And let me go back to Asia. Taiwan, chip country, trades over the highs, back under. That's a failure at the highs on the chip country. Now that's an interesting one given what we've seen. Let's see what the Nikkei's doing. Nikkei trades almost back to the highs and does not test. That looks like it will try to test tonight. Moving to Europe, FCHI, the French market. Those are going to try to test the lows again. And the DAX, the German DAX, also down today, but not as bad. So the DAX still looking okay. The CAC, the French market, going to try to test lows again. And the FTSE also going to try to come back into the lows. And that's a test failure again today, which is a retest, regenerate bearish. That one's going to try to trade lower. So Europe still in the crossfire, in the crosshairs here, are going to try to trade lower. Let me quickly move over to the SOXX markets. Now gold really couldn't get anything going today, early, and then just gave it up. Big spike down. Volume not that bad. It's coming into the big bar. Looks like it will test it tomorrow. Silver actually a little bit stronger, but it's testing that swing point low, hitting it with volume. This one's going to try to come deeper. Dollar was up today. Nice spike up. Decent volume. Nothing special, but decent. It's coming into this low. 5.99 on that low. It's doing 5.95 into it. That's a Y price spread bar. 21.45 is a low. So it tests into it today with about the same volume. That should try again tomorrow. FXE. This one started to break down today. Volume not expanding yet. It's going to try to get into this low, 133.76. And then we'll go to bonds. And I actually have a question that was emailed to me that I'm going to dwell on here a bit, which is about the bonds. So the bonds start to come down, volume expanding a little bit. They're into the support. They held. That actually looks like it's going to flip around and try to go higher one more time. So the question that was emailed in that I want to be sure and take and expand upon a little bit here tonight is that there was an issue with, or not an issue, but there is a commentary that was emailed to me regarding, and this is from one of my members over in Australia, regarding the QE ending in October and what effect that's going to have with respect to the bond market. And the thrust of the article really was saying, hey, Yellen has been so dovish that the bond market still hasn't priced in any risk. And if you pull these bonds back, and let's just put them on a monthly, if you pull them back, put them on a monthly, you can see you had a huge run up in the bonds, which lowers the yields, right? Spike up there, then it's comes back pretty deep, and now it's running right back the other way. While the market goes up, you've got bonds still going up, yields dropping. What gives? Well, the beginning of this year, I talked quite a bit about the fact that the bonds were going higher seemed to suggest that the market would have to sell off. The fear was there. But then there was a great article or video, actually, I think that one of the members emailed me, ended up on the front page of TA Today, and that was talking about the fact that with the regulations that are out there, with financial institutions needing a certain amount of high quality bonds in their portfolios, and with the Fed buying bonds, if you put all those things together, bonds were rallying as a result of that, just because there wasn't enough supply. And another part of that is the federal debt wasn't quite as much, it wasn't expanding anymore. And so that was increasing the demand with a limited supply. That's what led to this nice big spike up, and that's how we got up there. Question is what's going to happen now when they try to price in the real risk, especially if all of a sudden we don't get as dovish a Fed, which today we actually didn't. There was two things that were talked about. The one I talked about at the top of the show, and that is that the Fed, the notes passed out by the Fed today really talked about valuations maybe that didn't make sense, which is kind of like a throwback to Greenspan's irrational exuberance speech back in the 90s. And then the other piece of it was Yellen emphasizing that rates could move higher faster if the economy continues to do well, and vice versa. And then she couches it, of course, with her dovish stuff, and that is that rates could move up slower if the economy doesn't do as well. And then there was a piece that was like, out of the twilight zone, that was like, if things don't go well, we could just start QE up again. I mean, talk about, you can't give up the punch bowl. My God, she's like guarding it with a shotgun or something. So what's going to happen to bonds? Are they going to have to quickly price in the risk when in fact that risk becomes real? And is that going to cause dislocations? And I think to some degree, unless we see the Fed really get out in front of this and start talking in a more hawkish tone, that is what will probably happen. In other words, everybody's going to stay at the punch bowl as long as possible and sip the Kool-Aid as much as they can, and then all of a sudden throw the brakes on and go the other way. And they're going to take those carry trades and everything that they're doing with this 0% dollars that they're borrowing, and they're going to have to shift them somewhere else or unwind them or whatever they're going to do. And remember, the bond market and the currency markets are huge compared to the equity markets. So that could cause a dislocation, that could cause a big burp in the markets, and could be some huge indigestion as a result of it. So yes, I think that is a risk, and that was really, I think, the thrust of the question. And if in fact that's what happens, if the Fed does not signal correctly that they are going to raise these rates and give that to the market and give them plenty of time, to slowly unwind those trades instead of having to slam on the brakes, then yeah, we're going to see dislocations. I honestly, I think the Fed's painted in a corner myself. They can't give it up, and the longer this goes on, the more foolish they're going to look. Because Yellen basically told you today, with all their trillion, $1 million models, they can't tell us what the market's going to do. If the economy continues to get stronger, we're gonna take away the punch bowl. If it gets weaker, right? There's a bunch of ifs. It sounds like some of the people I read. If this happens, then that. If that, and they get about 15 if-thens out there, and pretty soon you don't know what the heck they're saying, and that's kind of where the Fed is. So I joked to members today, they ought to just study the TA model, the Neo-TA, and forget all the econometric models and save our money. Better yet, let the market price in the risk. Isn't that what the market does best? Doesn't the market, why can't the market just set the interest rates? Why in the hell do we need the Fed to do it? Well, because the Fed has to justify their existence, I suspect. But, I'll be glad when another Andrew Jackson comes along and wipes them out. So that's enough of my soapbox. Let's go to the questions here on the board. XLV. So, tested into the top of that high volume bar. So let's go to the daily. And on June 25th. So it came into this bar is what is being said. Bounced off today. It seems like it will test the highs again. But J&J had a big volume sell-off today. How does J&J look here? And J&J, of course, did this on earnings and a poor outlook going forward. But it did test in swing point high of sell 11. So first question is, does this look like it's going to bounce? I think at the top of the show, I was looking over here. I didn't look back at that big bar. Yeah, it did test into support. Has lighter volume. That low is 61.15. That top was 61.19. Closes at 61.29. So yes, you're right. It did bounce into it and back up. I don't know that it can go test the top again. First, it needs to get back over this breakdown bar. So that will be the test. 61.78. Looking at J&J. J&J has been up at the highs, has been continuing to be up at the highs, breaks underneath the breakout bar, so it's finally coming back to do the retest regen, which is here. When you're measuring a retest regen, you look at two things. You look at your swing point bar and the volume on it, and you look at your breakout bar and the volume on that one. You can see that the breakout bar didn't have as much volume, right? And so that's a problem. It gets up underneath the zone. It's probably going to bounce back up here, test this, and fail. So that's where J&J looks like to me. It's not a place I'd be that interested in now that they've given us news and the market hasn't rewarded it. I think you're going to see J&J probably come back. Looks like as deep as here. And then that's where you'll be able to actually measure it up again. So it will either come into the top of those two, or it'll come into the bottom of those two. And that would actually be, let me see here. Did it ever retest regen off of this high? 95.38. Yeah, it did. So it's already done a retest regen down here and definitely blew up higher. So I would think this 99.50 to, let me see, what is this number? 98.47 up to about 99.71. I think that's where you want to look at it when it comes back. It's kind of interesting because that was where the members were trying to buy it earlier. So when it comes back there, it'll be interesting again. But up here, no, it doesn't interest me. It's going to come deeper. So that's the questions on the boards. Let me check to see if nobody else has asked. Sorry for the scattered report today because we were having some power problems, but looks like we did get the show in, which is a good thing. And I don't see any questions over here. So, tomorrow we've got Intel. Intel powers the SOXX. That's going to be your tell tomorrow. If you want to know where this tape's going to go, Intel was up about, I think it traded, let me see what the ending quote was on it here tonight. Traded up to over 33, up 5% on the day. Intel needs to hold about 32.40, right, to keep this thing rolling. Anything under that, a close under that, I suspect is going to be, even though that's going to be over the highs, let me pull Intel up while I'm talking about it. Even though that will be over the highs, that's going to be, to me, that's going to be kind of the benchmark. And the reason for it is that's the ABCD structure on the way up that's in place, so 32.40. So if they can hold over that, then they can stretch this some more. But if they don't, then they finished out their ABCD structure and they're starting to pull back finally. I expect, you look out 2-3 weeks, you're going to see Intel down here testing this thing probably one more time. But they're going to gap tomorrow, and we'll see if they can hold up there and take the SOXX with them, because that's going to be the key tomorrow. Today you saw Apple start to pull back. You got earnings on Google so here's Apple. You got earnings on Google Thursday. So Google's up at the highs, and then you've also got Microsoft going to try to go with Intel. So these are going to be the big three tomorrow, along with Intel and the SOXX. If they go higher and Intel holds, market's going to lift one more time. All right, folks, that's it for tonight. Have yourself a great one. Thanks for being there. Take care, and I'll see you next time. I'm LA. This is and was your daily TA wrap. Good night, folks.